welcome to another episode of On the Couch with McNeill Real Estate. My name is Janet, and today we welcome Etienne from Deposit Assure, providing access to deposit bonds to help people buy property. So
Thanks,
welcome.
Janet. Thanks for having me today. It's wonderful to be here.
Great to have you here.
Thank you.
So, Etienne, tell us a little bit about yourself and your background.
Oh, look, I'm basically been in Melbourne, a Mini Ponds boy, lived in Mini Ponds all my life. Started a business in deposit bonds about 5 years ago.
Okay.
Saw a great opportunity to disrupt the market, particularly in Victoria.
That's an important word.
Yes, we're the only deposit bond company in Victoria because we see the most upside here.
Okay.
And we'll talk about the reasons why there's certainly upside here. But we just felt there was an opportunity to improve education to our market and also to assist buyers in very niche and unique problems when deposit bonds can really help.
Okay, that's fantastic. So, well, you just answered how long Deposit Assure has been in business, so that's great. In relation to now, obviously being a real estate agent, I do get some exposure to deposit bonds, but can you tell me what is a deposit bond and how it actually works?
Great place to start. So when you look at buyers who are looking to purchase property, on the eastern seaboard, generally a 10% deposit is often what's required.
Yes.
And that's often in the rising market where property prices are going up. That's quite a lot of money. What a deposit bond is literally an insurance policy, or what we call a guarantee, that basically guarantees the buyer for up to 10% of the purchase price. And the benefit of it is allows them to defer paying the deposit until settlement. Okay. So effectively it's just that guarantee that allows, it's like a stopgap is the best way I can put it, from signing the contract to settlement. Okay. And then at settlement they pay the full price. So it's backed by an insurer. In the event that something doesn't go right, if the purchaser doesn't proceed, the insurer then can pay the vendor that 10%.
Okay, so the vendor is guaranteed regardless of what happens, whether the sale goes through or it doesn't?
That's exactly right.
They are guaranteed. Okay,
that's exactly right.
That's an interesting concept.
The other way to look at it is like an IOU, I beg your pardon. Sometimes, that's also a good way of doing it. It's almost like the purchaser gives an IOU to the vendor. Look, I'm going to have this 10%, it's just coming at settlement.
Right, okay. That's an interesting concept. So in relation to that purchaser, do they actually have to have sort of cash or any other kind of security to be able to get access to a deposit bond?
Very good question. So, one of the misconceptions is a deposit bond isn't as strong as cash. And at the end of the day, I would argue that it's actually stronger because, you could go to an auction on a Saturday and as a vendor you get somebody wins and they give you 10%, but you don't know where the rest is coming from.
Yes.
You don't know if they've got more than a pre-approval from their mortgage broker. You just really don't know. But when it comes to a deposit bond, we actually look at their financial capacity to settle. Okay. If anyone does not prove their financial capacity to settle, we just don't issue a deposit bond because it doesn't help me, doesn't help the perception of my product, doesn't help anybody because the last thing a vendor wants is somebody that doesn't show up at settlement, even though they can get the 10%, but they want the full balance. That's exactly right.
So do you actually is it like a formal loan application type process? People have to provide their identification, their income. What do they need to do?
Good question. So generally the financial capacity is proven in two ways. The most common is obviously sitting with a mortgage broker. A mortgage broker will help get a finance approval in place. And as long as that finance approval is conditionally approved, subject to evaluation, we can issue a deposit bond.
Okay.
Obviously if it's formally approved, that's also better. So the risk is so low because we've seen that they've got a finance approval in place from an Australian bank or lender. So we know their ability to settle is proven.
Is there. Okay.
The other way, if there's no finance, is we do our own assessment on the equity that they hold in existing properties.
In something else.
So that we know that if they were to obviously, apply for finance or perhaps sell their home, they're going to have the capacity to settle on that purchase.
Okay, so this raises a question for me is, does someone apply for a deposit bond before they make an offer and sign a contract, or do they sign a contract and then apply for a deposit bond? How does that work? So
obviously when an offer is put in and a verbal offer is accepted, before signing it they need the deposit bond to be able to facilitate that exchange process. We always say speak to your conveyancer, speak to your broker prior, and a good broker would actually sort of ask that question early. Where is your 10% coming from? So that when they go down to put an offer, they've had that due diligence, they've had that discussion, and if a deposit bond's required, the mortgage broker can get that underway on their behalf pretty quickly.
How soon from sort of go to woe from saying, yes, we're been approved for a deposit bond, how long between that and the actual, well, I guess, what is it? Is it a certificate? What is it that's produced, and how long does it take?
Exactly, it's a piece of paper with a QBE insurance backing, so our deposit bonds are backed by QBE, and it just basically includes the terms of the purchaser, the vendor, the property address, and in terms of how quickly, as soon as the documents come through and an application is signed, we've got the finance approval letter, photo ID, and it's a one-off fee that the purchaser has to pay for that deposit bond. It's issued within 1 business hour. So it's a very quick, it's a very quick process, and it needs to be quick because people are often, fighting against other buyers. On a Friday afternoon, you've got people frantically trying to get their auction bonds for the Saturday. So it has to be a quick process, and this is one way we've tried to disrupt the market to try and make it more attractive as an option.
Easier. That brings me to another question. Who holds this piece of paper?
That's a very good question. And with all respect to my real estate friends, when a purchaser says, "Oh, please send it to the real estate agent," that's not the right solution. It has to be given to the purchaser's solicitor or legal rep, because they're the ones that hold it and facilitate the exchange process with the legal rep of the vendor side. And so they should then send it to the vendor side. The vendor should hold it, and they hold it until settlement. And then
so the vendor's conveyancer or solicitor.
Correct. And once they hold it, once settlement happens, the bond is basically worthless and it can be thrown away.
Okay, so with that, what does that mean that you provide that? Let's say we're talking about a purchase of, let's say, $500,000. So it's a $50,000 deposit bond. So it's a piece of paper, the vendor's conveyancer holds that piece of paper. Settlement comes along, they've ripped the paper up, but where's the money?
So once settlements happen and it's gone through, the money's come through from finance. So perhaps their mortgage broker has arranged for the full purchase price plus cost plus the deposit. And so basically the deposit is then exchanged for the bond at the time of settlement. Okay,
so this deposit bond is, as you said before, it's a guarantee that should the deposit not appear from someone else, that $50,000 at settlement, then we call on that bond for you to pay the
So not just the deposit, but also the full purchase price. Because obviously, if you're not getting the full balance at settlement, then you can call on the bond to recover that 10%. In that regard. So you've got it exactly right.
Okay, that sounds great. So with the contract itself, is there any sort of special condition or special thing that you need to put in the contract so that people know, or the vendor or whatever, everyone knows, that it's not actually a deposit that's being paid, it's a deposit bond?
It's a very good question. What we ask, there's 2 things on the contract. Number one is when, I guess, purchasers are looking to negotiate and where the 10% is coming from, to stipulate on the contract that it's by way of a deposit bond, and particularly a QBE-backed deposit bond is what we're trying to push in this market in Victoria. And why that's important is that a QBE, we're the only insurer with an Australian underwriter in this market. And last year in 2018, there were 10,000 buyers actually had bonds that were effectively worthless from an overseas underwriter.
Really?
And that really affected the perception of our product because all deposit bonds are not created equal. They're different, and it all comes down to the underwriter. And one of the things vendors can do is check who the underwriter is. And with a trusted brand like QBE, it's the promise of paying the vendor in the event of a claim. There's no other security of cash or equity. It's just the promise of that insurer. So it has to be a trusted insurer when you make that decision. So, we're seeing a lot of special conditions in contracts right now where vendors are requesting a QBE-backed bond just for the protection it offers vendors. And I think that's a big point. And even for real estate agents, to protect your own vendors and their own interests, insist on the ultimate protection by insisting on a QBE underwritten deposit bond.
From a real estate perspective, and obviously part of how we work is in Victoria, you can get access to a deposit under Section 27 early before settlement. So from a real estate agent's point of view, if that money gets released earlier, we get paid. How does that sort of affect, do we get paid before settlement?
That's a very, very good question. So the reason why most of our business is done in New South Wales is because we don't have that same Section 27. So the Section 27 was designed for the same benefit to vendors where they don't have access to enough cash to be able to put down a deposit for their own purchase, so they can call upon a Section 27.
Yes.
Unfortunately, and I mean this with the greatest respect to my real estate friends and yourself, is unfortunately, and I've seen it with my own purchase for property, real estate agents unfavourably call the Section 27 just to get
get paid.
Paid earlier rather than settlement, because when there's a deposit bond, there's literally no cash.
That's
the
right.
cash only coming at settlement. So a real estate agent, like our friends in the broking world, we have to wait till settlement before that comes through. So the way I put it is, the Section 27 is a good product. It's there for a reason.
Yes.
But when you've got a buyer who needs a deposit bond, if there's a reason why the buyer needs it for whatever reason, it's just a matter of getting that commission or that payment at settlement rather than earlier. And at the end of the day, for the outcome of being able to facilitate that exchange. And of course, what I say to them is the overall outcome is that deposit bonds open the listings to more buyers. Buyers who don't have access to the cash today, but will do at settlement, and buyers who perhaps it's more convenient to use a deposit bond over a cash deposit. For example, you know, in this area where you are, this beautiful part of the world, people who are looking to buy a holiday house. They've got equity in their home in Melbourne, and their money's working hard for them in their offset account. They need to put down 10%. We can issue a deposit bond just by leveraging their equity, and there's a sale for you guys here. So it's a great product for that.
No, that sounds really, really interesting. So my next sort of question is, how long does a deposit bond last? And is there a use-by date? And I guess for that is something like, you know, if someone gets approval for it, and they buy a house and that one falls through, and maybe they buy another one and that falls through, and then they buy, you know, do you know what I mean? Something like that. Is there a limit, a time frame?
Very good question. So really, if you're buying an established home, a deposit bond has to expire no earlier than the expiry date of the settlement date, I beg your pardon, of the contract. So, you know, 42 days, 90 days, whatever that is, we would set it to a minimum of 3 months. And in most cases, 3 to 6 months is the term that we play with in the established market. For off the plan or land purchases that perhaps are untitled, the longest we've ever done a deposit bond for is 78 months, which is a long time away. So there's no limit on term, just comes down to the sunset date. There's a limit in terms of the amount. It can only be up to 10% of the purchase price. To answer the second part of your question, we have an auction product as well, which is an auction bond, which means that if your buyers are entering an auction market, which is quite common in Victoria, it's effectively an open bond for up to 10% of the maximum bid price. So you don't know the property details because you haven't bought, but you can keep it open with you, and you can take it with you to auction. And you can reuse it for up to 6 months until you're successful. Now you can negotiate private treaty or post-auction, and it still works because you just fill out the vendor's details, the address, and the final purchase price. So it gives buyers that confidence, and it doesn't cost any more. So it just gives that flexibility with buyers.
Sounds brilliant. So are there any other services that you currently offer?
Really, we're doing deposit bonds at the moment.
Specialise in that one niche.
We just specialise in that one niche, trying to improve that offering. Particularly, I think at this point in time, we're doing a lot with buying and selling, particularly with upsizing. I think is something I should mention. And you can imagine buyers looking to upsize or even downsizes where clients won't have access to that funds. So that's probably the niche at the moment where we're focusing our service offering.
Okay, great. So down here we have a lot of retirees who are downsizing from the family home, moving into retirement, that kind of thing. And we do actually have a lot of first home buyers as well. We've been encountering a few of those recently, so that would be great. So with your services, how do people access your services and how do they find you?
I think there's a couple of ways. So they can come direct to us as well, which we can help them on that offering. Whether it's a referral from you as their agent to say, listen, I've discovered that you may not have access to the cash today. You're buying and selling. Hey, have you thought about a deposit bond? And we've got some marketing resources to help. Or the most common way is also the mortgage broker. Now, mortgage brokers are so trusted. We work closely with mortgage brokers because you know clients trust them. I think they're doing 70% of the volume at the moment in terms of loans. So there's a reason for that. So speak to the mortgage broker early. A good broker will ask the question. They'll be able to ascertain where the funds are coming from. And a broker, if they need a bond, we've got a simple process for brokers where they don't have to do all the paperwork, but they can get one done on behalf of their client, nice and easy. So those are the two angles. They both work. My preference is go through the broker because I feel like that's a trusted source.
Terrific.
Yeah.
No, that sounds fantastic. And Etienne, what do you do when you're not working?
Oh, very good question. I've got two wonderful girls,
Yes.
5-year-old and 11-month-old. So they're the pride of my joy, my girls and my wife. So we tend to go on excursions, on hikes. I like a bit of fishing as well, which is good. And exploration, like going around the country and travelling. I'm from Malta originally, so we go to Malta once a year to see the mum and dad. They're both there, both sets. So a lot of travel and things like that keeps me good. But my girls are my everything. Absolutely.
No, that's fantastic. Well, that concludes another episode of On the Couch with McNeill Real Estate. And thank you, Etienne. We've learned a lot of very valuable information today. So it's been a great pleasure to meet you.
Thank you. I'm very pleased, and thanks for having me.